Hey, this is Greg. I wanted to talk to you about what went on in the market this week and give you some of my thoughts as to what's happening. And I think I want to call this video, "The Market Fights the Fed." All right, so the government came out with CPI this week, and it came down from the last month, which was a 7.1% print. It's now 6.5%. So inflation is coming down from the peak of 9.1 several months ago. And so the market has concluded that the Fed mid-year is going to start cutting rates. Now this to me is a completely fallacious assumption and conclusion, and it really leads me to believe that people in the market today are just not believing what the Fed has been saying, and they're setting themselves up for another disappointment. It seems like there's nothing the Fed can say, there's nothing the Fed can do to convince the market that it's serious about cutting inflation. The Fed has stated many times that its target is 2%. It's currently at 6.5%. And what is even more troubling to me is when you look at the components, and particularly you look at food and energy, you can see that inflation is not only persistent, but it's still extremely high. And what I can't understand, when you look at some of these food categories that are over 10% increasing, and you look at fuel oil, for example, up 65%, and you look at some of the components of food and energy, and you see double digits all around, how can CPI be only 6.5%? So that's what I've said all along on this channel. I think the official print is a fantasy. I think the real rate is double digits, low double digits, probably 10 to 15%. The average American is suffering. Everybody is having trouble meeting their monthly expenses. Utility bills are going through the roof in most areas of the country. Heating bills are through the roof. I can tell you myself, my electricity has gone up 10-12%. My heating oil in Vermont has gone up 65% since last year. It's just absolutely shocking what we're seeing in these bills coming forward, and it's really starting to affect the American people very negatively. And one of the things that I focus on, of course, is labor costs, because that's such a big component of inflation. Labor market's still tight, guys. Maybe it's coming down a little bit in terms of the wages going up, but in real terms, meaning net of inflation, wages are going down. So the labor market is still extremely tight. The unemployment rate is still around 3.4%. I've seen no improvement in that. I still believe that the Fed is very far away from cutting rates, okay? Now what may happen is they may increase rates the next couple of months, and then once they get to a certain point, they may stop and let the increased rates filter through the economy. But I don't think you're going to see rates being cut really anytime this year, okay? I'm happy to be proven wrong, but I just don't see that happening. Now the other thing, going back to what I said earlier in the video about the market just does not believe the Fed, despite what the Fed has been saying, when this data comes out, the bond market has been rallying. So rates on the short and longer end of the curve have been declining, and that means that the market does not believe the Fed, okay? So you're not only seeing it in the stock market, you're seeing it in the bond market. I think you're going to continue to see these bear market rallies. We've seen basically a bear market rally since the beginning of the year. I think you're going to continue to see that. But as depending on what the dollar does, depending on what the Fed does, you're going to see continuing sell-off, because I think right now the market is putting itself in a position to be disappointed when further Fed tightening comes along, and when the Fed makes more hawkish remarks. You're going to see all that optimism come out of the market, and you're going to see further sell-offs. So I think we're still in a bear market. I don't see any reason to change that view. I'm still bullish energy. I'm still bullish. I'm still bullish some of the high quality growth stocks that have enormous earnings and potential for earnings, but you have to understand that in the short term, the Googles, the Apples, things of this nature, these incredible blue chip growth stocks are going to have a rocky road of it, because we are in a bear market, and in a bear market in general, everything goes down. Now, the reason I don't think that energy stocks are going to go down is because of what I've talked about many times on this channel, that I think that there's a structural imbalance in the United States and in Europe because of government policies, and also because of the war in Ukraine. I think the energy market's going to continue to be tight. Yeah, it's just going to continue to be tight, and they're unable to refill the strategic oil reserve because they can't get to the prices. Prices have gone up the last week. They're trying to buy at $70 a barrel. It's like almost 80 now. You know, so that's been a disaster. But, you know, virtually everything that the Biden administration has done relating to energy has been a complete and utter disaster. So in terms of what I'm doing, I'm keeping 20 to 25% of my portfolio in cash. I'm keeping dry powder, looking for opportunities. I'm doing some trading. I had the 𝐦𝐨𝐿𝐞 on for a long time throughout the entire downturn that you saw at the end of the year. I took my profits on that and covered, so to speak, which just means that I sold it, because it's the triple leverage negative QQQ. So by owning it, by being long it, you're short the market. And I sold it, and since then the market's generally gone up, so that was a good move. I didn't get so cute to buy the 𝐸𝐸𝐞 and, you know, ride it back up, because that's getting a little too cute for my blood. And but I'm watching it, and if there's a very extended rally and the prices go up to where I see it's at the lower end of the trading range, that is the TQQQ, I'll go back long on that and use it as a hedge. It was a wonderful hedge all the way down. There were many days when the market sold off 400 or 500 points, and my portfolio was up. In fact, last year, and I'm not bragging, but last year my portfolio was up 70%, okay, in a market where the NASDAQ was down over 30%. Okay, so that's what I have to say today. I just wanted to do a short update. And thank you for watching. If you got some value out of this, please like and subscribe. And I'd like to have you on board for the next video. We do videos here on the stock market, the bond market, real estate, economics, Fed policy. We cover every topic that you would be interested in as an investor to make you a better and richer investor. Okay, so thanks for watching, and I'll see you on the next video.